Hey Bowtie Nation, Joseph Hogue here. Thank you for joining us for a Monday market update, 9 a.m. Eastern, every Monday morning. Get you ready for the week. Stocks to watch, economic news that could guide the market this week. The market is up 10% from its late October low, and 326 of the stocks in the S&P 500 are up just over the last month. There is one big name investor, though, that's not buying the bull market. Warren Buffett has sold billions of dollars of stock just over the last 3 months and is sitting on a record amount of cash. Does the Oracle of Omaha know something that we don't about the stock market? We're going to dig deep into the Berkshire Hathaway's recent stock changes. Stick around after that. We'll do our Monday market update with all the stocks I'm watching this week and the economic news you need to see. We'll look at those stocks Warren Buffett is selling next. But first, if you want to see the 5 stocks I'm buying over the next 30 years, my forever stocks, look for the link I'll leave in the description below. It's a free report I put together with the Motley Fool, some of the biggest stocks in my portfolio. That report is totally free. You'll see the first stock immediately, and they'll email you the full report with the other stocks. These are some of my favorite stocks to buy, so look for that link in the description below, or just scan the QR code here. Back to our main topic though, because Warren Buffett's Berkshire Hathaway has reported quarterly changes to its stock portfolio, showing what the Oracle of Omaha is buying and selling, or just selling. That's because the only new investments to the portfolio were an $8 million stake in the Atlanta Braves holdings and $44 million in Sirius XM. Combined, it's a paltry 0.017% of his $313 billion portfolio. Warren Buffett has always been a big baseball fan, and the Braves were spun off from one of his other holdings, Liberty Media, over the summer, so he's basically just keeping that position by buying into the new ownership. Buffett completely cashed out of 7 companies, pocketing nearly $24 billion in the first 9 months of the year. Most surprising was a complete exit of his $850 million stake in GM, a position Buffett has been in since 2012. He also sold out of Mondelez, Johnson & Johnson, Procter Gamble, UBS, and Celanese during the quarter. Buffett also trimmed some of his exposures, selling $2 billion in shares of Chevron, or about 10% of his holdings. He still owns over $15 billion in the oil company, so it might not be so much a negative call on oil or oil stocks. He also sold $520 million in shares of HP, though still holds $2.7 billion of that stock. Amazon also got cut $70 million, with remaining holdings over $1.4 billion in the e-commerce giant. Now, by ditching those shares of GM, Buffett might be saying that he's finally tired of just hoping that the car makers can prove his value thesis. After the recent union agreements, legacy automakers like Ford, like GM, are going to be saddled with huge wage expenses that they're going to make it even harder to compete with those non-union makers. With nearly half of his money in Apple, the Berkshire Hathaway portfolio is basically just a bet on Apple with a few side bets here. After Apple, the next 10 stocks make up more than 3/4 of the remaining portfolio. In fact, the remaining 40 stocks are just 10% of assets. So while Buffett's $2.8 billion stake in EV maker BYD is a lot of money, it's relatively insignificant to the portfolio at just 0.8% of total assets. That means shares of BYD could triple, and it would still only be a blip on the portfolio's value. More than anything, I think this quarter's changes really strike me as consolidation more than anything else. Buffett's portfolio has always been a lesson in his anti-diversification credo, and it's becoming ever more so each quarter. Buffett and his team there at Berkshire seem to be saying that we really like these top 10 companies, and these 40 are okay also. Within those biggest bets, and excluding the giant investment in consumer electronics Apple, Buffett has $54.6 billion, or 15% in the financials companies, $29.3 billion, or 8% of his portfolio in oil companies, $33.8 billion, or 9% in consumer staples here, and about $15.5 billion, or about 4% of the portfolio just in Japanese stocks. One of the biggest lessons to the report is Buffett is once again saying that there's relatively few opportunities out there for a value investor, especially when you can get close to 5% returns on risk-free treasuries and CDs. The portfolio is now sitting on $157 billion in cash, most of it invested in those treasury notes. That's second only to its investment in Apple, and no other company even comes close to that investment size. I have some of my money in T-bills, but also have a lot of my cash in this no-penalty CD at CIT Bank. These pay 4.9%, so a little lower than the treasuries, but you have instant access to your money without the regular penalties you get with CDs. You earn interest daily on these with no opening or maintenance fees, and it's all FDIC insured. So I'll link to that no penalty CD in the description below, as well as some of the other ways I'm investing my cash right now. Turning it over to some of the stocks I'm watching this week, despite the fact that the market was up over 2% last week, there were some major changes in the portfolio. So I wanted to address those, talk about some of the stocks that did fall last week. First off here, Advance Auto Parts, ticker AAP, reported disappointing earnings and saw the stock crushed 10% last week. The company did beat its revenue expectations for about 3% growth over the year at $2.7 billion, but reported an operating loss of $43 million, down from a profit of $171 million in the same quarter last year. Now, Advance has struggled to compete with its peers for years, and this new CEO is trying to turn the company around, but that doesn't happen overnight and is not having much success just yet. Still, the company has $317 million in cash, enough to carry it through a transition, and news that it's looking to sell its 320 WorldPac and or 1,300 CarQuest stores could be a big move. Just that WorldPac segment alone could get billions of dollars in a sale. That's really going to help it pay down its debt, and what's more important for investors, buy back those shares. I believe a share buyback program is coming over the next year here, could really boost these shares. ChargePoint Holdings, ticker CHPT, was by far the biggest disappointment for the week when management pre-announced some of its earnings details and a change in leadership. The company said it would report sales of just $110 million during the quarter. That is far below the $155 million expected by Wall Street. ChargePoint also replaced its CEO and CFO in a surprise move that drove the shares down. Here you see 35% on Friday. Now, I will continue to hold this stock and the upside potential on EV charging. While EV adoption has slowed this year, it is still positive. And that charging infrastructure that ChargePoint excels at, that leads in, needs to grow exponentially for those cars. ChargePoint still has a $396 million in cash and untapped $150 million credit line. So that gives it about $550 million in liquidity and no debt due until 2028. So you've got years to continue growth and really boost the shares here. Got to talk about NVIDIA Corporation, ticker NVDA. It's going to be reporting earnings on Tuesday with the stock's price up 233% this year to a $1.2 trillion market cap. That is a huge change for this company. The semiconductor leader is expected to report a 434% jump in earnings to $3.10 a share from the last year. It's about $10 per share full year earnings. That's going to help it bring it down from this an astronomically high PE ratio just a little bit. Shares still trade though for 37 times revenue, and recently come under news that short seller Michael Burry is shorting the semiconductor stock after this year's strong rally. So we're going to see what NVIDIA says, if it's able to support those prices and prove Michael Burry wrong. Showing you the bigger picture here with the sectorspiders.com sector tracker, we can see that over the last 5 days, all 11 stock sectors closed higher last week, with the rate-sensitive sectors really seeing that boost from lower interest rates. The interest rate on the 10-year Treasury went from 5.62 to 5.44%. The SPDR real estate ETF, the XLRE, that real estate ETF here, is now up 12% since late October, really boosted as those lower rates support property values. We've been talking about this, really the main hurdle for real estate right now. Yes, we have a lot of problems in office, a lot of problems in individual property types as well, but the main problem is those interest rates. Okay, higher interest rates obviously means lower cash flow and lower property values for these real estate owners. That's why I believe during this next year, as the Fed actually does start lowering interest rates, we're going to see a big boost in property values and in these REIT stocks, in these real estate stocks. Solar energy stocks also got a rate-supported boost, with most solar stocks up more than 10%. Enphase alone was jumping 19% last week. The big story here, folks, though, while I do believe inflation is on the way lower, as we pointed out in last week's update, just before that massive CPI report that boosted stocks, it's going to continue to support stocks, but it's just hard to believe that that giant drop in interest rates over the last few weeks is real. Okay, here we see the interest rate on the 10-year Treasury note, really the benchmark for all other rates. That 10-year Treasury topped just over 5% around mid-October. It's now down 56 basis points, almost more than 0.5%, which is a huge move for interest rates, to 4.4% last week. The drop has recharged that bull market in stocks, but just feels a little too far too fast. Now, we won't get much economic data this week or earnings reports to support stocks. It's all going to be on investor sentiment. We're going to have to wait until the end of the month for that PCE inflation report for any confirmation on lower inflation, and then the jobs report there in December on the first Friday of the month to really support the slowing economy thesis. I wouldn't be surprised if the market trades flat or slightly lower here for the next 2 weeks as really the market digests that drop in interest rates. Don't forget to look for that link in the description below and get your free report, The Top Stocks in My Portfolio, My Forever Stocks. Or click on the video to the right for the 7 monthly dividend stocks that will pay your rent, the average rent by state, and the stocks that will pay it. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking that bell notification.